What is going on, guys? This is going to be a part 2 of my last video on how to easy way to make money in the market. This is going to be showing you guys how to take these trades on the Rangers. Now I showed you what type of stocks you should be trading, stocks with range. Now I'm going to show you the types of trades you should be taking with these stocks to show you guys how you make this money. Okay, so now these aren't going to be, beginner setups or anything like that. One of them, the second one's easier, but the first one I don't expect beginner traders to understand. But again, guys, just showing you how this works. Now, the first stock, a lot of you might not be looking at it because it's a $350 stock. But again, guys, we're not taking 1,000 shares. We're not taking on this trade. You're not even gonna take 500 shares. They're good setups, very small amount of risk, huge reward, and that's what you're looking for, guys. You're not looking for a trade. You should not be looking for trades that you're risking 50 cents to make 30 cents, or risking or you're risking a lot to make nothing at all. That's what you should not be trading. Now here we go, enough rambling on. Here we go. First one, BIB. Like I said, a lot of you guys might have been turned away from this because the price range is so high. But as I've mentioned, we're not taking 1,000 shares. Okay, on this one, say you have 100 shares. You're taking 100 share trades. You're gonna risk, you're gonna take 100 shares. Okay. So the stock gapped up with a lot of these gappers that gap up huge. I'm not really sure how much it gapped up. I forgot. You expect them to come down at least some. Just because they gap up huge does not mean they're gonna continue to keep on ripping up when the bell rings. Okay, so this is something you should definitely be looking for. Okay, you see the stock kind of went up. Not really, didn't really do anything. It was trying to decide what it was gonna do. And then it just came downwards. Okay, this is a big downward momentum. The momentum is downwards. It's to the downside. Very easy. The type of trade you should be taking is a short. Okay, don't be trying to take a long here. So a very quick, easy entry, you should know this, is 350. Why? Because that's a whole dollar, or that's a whole number. Okay, so as I've mentioned before, it's all about psychology. Whenever you sell a stock, or whenever you're selling your car, you're not going to sell it for $30,531. You're going to sell it at a whole number. You're going to sell it at 35,000, 30,000, 32,000. It's always going to be a whole number. You're never going to sell it at, so say you're selling, your bike. You're not going to sell your bike for $251. You're gonna sell it for $200, $150, something like that, $175, something like that. So again, that's pretty much what it is, guys. So $300 or $350 whole number at this point is gonna be a level of support. So you got a level of support right here. Easy trade to get in, short right under 350. Okay, momentum's downwards. No need to be scared or anything. Okay, now as you can see here, it hit 350 once. And it bounced up. I decided it was going to bounce up. Stock kind of tagged along the VWAP here. Didn't really get too close to it. And it just decided, I'm not going to go up. I'm not going to go up. I'm going to come down. So at this point, the stock, whenever this candle hit right here, at this point, the stock's going to give you a signal. Okay, take me short. I want to go down. I'm not going to go up. I'm tired. Take me down. And that's exactly what you should have done. Under 350, short under 350. Say you got in here 100 shares, you cover down here. The low of day, I believe, was 340.55. Yeah, 340.55. Say you got out there, $1,000. Now I don't expect you to really get out here. Say you were looking for that 340 break. Because you wanted more than 10 points. But it didn't happen. So maybe you got out right around this area here. Now, say you got out around 341. 9 points, 100 shares, $900. Easy, guys. This trade's not going to be messing with your head. It comes straight down. No need to be scared of it. Very simple. Now, I know what you're thinking. Well, the stock, came down, but then it came back above. Well, look at this. And these type of stocks, with every stock you go in, you have to know how much you're willing to risk to how much you're willing to gain. How much are you going to gain? What's your risk to reward ratio, basically? What is your risk to your reward? Now, as I mentioned, if you're risking 50 cents to make 20 cents, that's not how you should be trading. Now, with these stocks, you're not going to have a 10-cent risk. You're not going to have a 20-cent risk or 50-cent risk. These stocks, you got to have a couple of points. Okay, why? Because these stocks move quick. They move quick. And if you have a 5-cent stop loss, like, you do with these lower cap stocks or whatever, you're going to be getting stopped out every single time. Every single time. So on these, you got to have some points as a stop loss. All right. Now, I know what you're thinking. Well, man, I don't want to lose points. I don't want to lose points. Well, check it out, guys. At least check this out. You got in at 350, or at this point, the VWAP is at 355. Now, that's a 5-point. If you're risking it to the VWAP, that's 5 points. That's $500. Okay, that's $500 you're going to lose to make $1,000. You're willing to lose. Now, let's say, I don't want to risk $500. I understand, so just risk, 2 points. 2 points, guys. Risk 2 points. At this point, it's kind of what you feel comfortable. It's kind of hard to explain because it's something you would have to be doing during the trade so you can actually see the price action. Let me try to. It's kind of hard to explain, guys, but like I said, check this out. So this is a 1-minute chart. So you would have got in here at the break of 350. As I said, it bounced up around here. The first time it bounced up, came down, went into 350. It comes up, but look at the stock. At this point, the stock is just flat. It's not doing anything. It's flat. So what is this? The high of this, I don't know, 357 or 351.83. So you're risking 2 points, guys. At this point right here, you shouldn't be scared at all. You shouldn't be scared. It's just flat lined out right here. The high is 351.90 something. Okay, so you say, okay, you know what? I'm gonna risk, 2 points. 2 points, and I'm gonna risk 2 points and maybe 25 cents or something. There's a reason why you shouldn't have your stop losses at a whole number. Once again, is because when people sell or buy, it's always going to be at a whole number. So if your stop loss is at 252, most likely you're going to get triggered because there's going to be some people that sell at that point or buy, So you always want to have it a few cents above your stop loss. Because if you have it right at whole numbers, you're always going to get stopped out. Because that's when you always expect it to hit that whole number. Okay, but you don't expect it to go past your whole number. So what does it do here? 350. The high of day is 350, 96, something like that. 351. 352 is the high of day. So exactly 352 is the high of day. It flatlined right here. And say it stopped you out right here anyways. Just say, oh man, it stopped me out, 2 points or whatever, stopped me out. It's okay, guys. Go in the trade again. If it's coming down, most likely it's going to come down. For sure. So go in the trade again. 350, 100 shares, guys. Look what the stock did. It comes down 10 points. Now, not 10 exactly. It comes down. Yeah, it does. As I mentioned before, say you didn't get out here because you're expecting a break under here. Now stock's coming back up. Say you got at 351 around this area. You made 9 points, guys. Your risk was $200 to make $900. That's the type of trade you should be taking. Now, I understand with this type of stock, it's a $350 stock. It's harder to understand because you're risking $200. Some of you might not be making $200 trading in a day. It's actually very simple to do, very easy to do, but again, guys, your risk is very low compared to your reward. Your risk is $200 and you're making $900. Okay, say this was too risky for you. I want to clear indication that the stock is going to come down. Well, look at this green and red move here. Just the low of break, the low of this candle here. The low was 346.71. So let's just say you got in at just an example, guys. Let's just say you got in at 346.70 or 50 or whatever. So you got in at the break of this low. Again, guys, just for what, $200, something like that. You got in right here. So you got in right here at 247. High of this candle is 249. That's 3 points. If you're not comfortable with that, just risk what, $200 or something like that. And look at this guy. You still would have made 6 points from here to here. You would have gotten in at 346 and some change, and then you would have got at 341, 5 points, 6 points. Very easy, simple trades, guys, and you're only risking $200. Now I understand this stock is a little bit harder to see the risk reward, because the candles are kind of so close, and you're thinking $200 is a huge stop loss or whatever. I understand, guys, but check this out. The next trade, very easy, simple trade. You could have made a lot of money on this trade. Okay, so look at this. Facebook, it comes up, comes down, hits the VWAP, rejects the VWAP right here. Get in at the break of 200. Why the break of 200? Because it's a whole number. This is when you're going to have buying power. So getting at the break of 200, your stop loss on this is literally less than 30 cents. Stop loss is, a little bit below the VWAP. So let's just say the VWAP, the low of day was 199.85. You got in at 200. Your stop loss is less than 36, and check out what you're making. I would expect you guys to sell somewhere around here, the 200 area, because you see this hammer come down. So I would expect you guys to sell around this area, maybe around here. So still, guys, you're making what, 2 points, 100 shares, $200, guys. Very, very simple, very easy. And you might be thinking, oh, $200 is not enough. I'm in here, an hour and I'm making $200. Guys, do you make $200 in your day job? Yes or no? Do you make $200 in your day job? Most likely you don't. So on this trade, in less than an hour, you're making $200, and it's a very simple trade, guys. You get in at the break of 200 here. Your stop loss is at the VWAP, literally 30-cent risk, less than a 30-cent risk, and you're making $200 on the trade. Now let's just say, hypothetically, you cut out half right here, and you let the rest run all day. There was no reason. After it came up here, there was no reason to get out of the trade, because the stock just continued to trend upwards. Maybe around right here, you got a little bit nervous, got out, whatever. Say you got in out way out here, 203. You made what, 3 points and some change on the day. You would have made what, possibly $400, $350 or something like that. Very simple trades, guys. Very, very simple trades. Nothing to be scared of. This stock isn't going to be, jumping up and down from 250 to 350. It's not going to be jumping down like crazy. You're not going to be scared. You're not going to be on your hand on the trigger ready to get out of the trade. Very simple trades, guys. Now, I know you're probably like, man, I'm risking $200 another one on this one here. That's a lot of money. I don't have, that amount of money, or the price is too high, whatever. Think about it like this, guys. How many times you go to the store and you're buying, I don't know, this might be a good example, but just think about it this way. Some people, you go out there to the store, you buy a $200 shirt, or whatever, $200 shoes or whatever. Okay, so you wasted $200. That's money that is gone. That's money gone. Same thing here, okay? If it stops you out, you lost $200. That's money that's gone. Okay, you lost $200. It's gone. But your reward here, this is the key, guys. On this, you have a reward. You have a reward. Your reward is $900 or $600. You have a reward. If you go out of the store, get you some $200 Jordans or Nike, whatever. What's your reward? You don't have any reward. What's your risk? You lost $200. You got these shoes. What's your reward? Now you're probably thinking, oh, the shoes in my reward. Well, the shoes, they're not your reward, guys. They're made in China for $1 and they sell them to you guys for $200. You lost out big. You bought $200 shoes. What's your reward? Looking cool with your friends. That's gonna be your reward. You know, to me, that's not a very good reward. This is a better reward, guys. So it's the same thing, guys. What I'm trying to tell you guys is, you go out to the store, you waste. It's so easy to waste $200-$300 on random stuff that you're gonna lose or you don't really need. And the long term is just money that's gone down the drain here. On this, you're risking $200 and you're making $900, guys. It's very easy, very simple. This stuff isn't very hard. This stuff is easy, guys. Now, I'm not saying trading is easy, but once you learn how to do this, once you have your rhythm, your strategy set, this can become very easy, guys. The hardest thing about trading is just the psychological part. That's the hardest thing about trading. Trading is easy. The hardest thing is your psychological thinking. So what I mean by that is, if you got in here at the break of 350, under 350, and then went up again, now you're like, man, you know, I'm down $200, or how high is it gonna go? That's your psychological thinking, guys. That's the hardest thing in trading. But trading is not hard. Trading is easy. No, I'm not saying you're gonna become a million overnight. I'm not saying you're gonna make a lot of money overnight or anything like that, guys. This is a very, very slow journey. It's something you should be taking slow. It's not something where you're gonna be making, you know, $10,000 a day, $1,000 a day, guys. If you're not making $1,000 a day on your day job, what makes you think you're gonna make $1,000 a day trading? Now, does it happen? Can it happen? Will it happen? Yeah, it's gonna happen, guys. But as a beginner, what makes you think you're gonna be making $1,000 trading a day? You know, if you don't do that in your real life, what makes you think you're gonna do it trading? Okay. That's pretty much it, guys. I'm just showing you guys how to use these range plays. Very simple, very easy, as I've said before a million times. But what I'm trying to get you guys to understand is that, you know, a lot of times, like I said, you go to the store and you buy a bunch of stuff, whatever. You waste $200. It's easy to waste, you know, $200 on shoes. But why is it hard to waste $200, you know, trading? Why is it hard to have a $200 loss trading whenever you're at least, say you don't get the reward trading, but at least there's a possibility of getting that reward. Okay, as I mentioned, if you go buy $200 shoes, you bought the $200 shoes. What's your reward? The reward is not your shoes. In a month, they're gonna be gone. They're gonna be all worn out and all nasty. What's your reward on shoes, guys? Nothing. Looking cool with your friends. That's your reward. That's not a very good reward. On this, your reward $900. Build up your account with time. You take larger positions. You have, you know, more reward, and your reward just keeps adding up and adding up and adding up. And that's what trading is about, guys. That was pretty much it. Don't want to make this video too long. That's pretty much it, guys. If you guys have any questions, comments, or any other things you guys want me to show you guys, feel free to tell me in the comments below. Stay tuned for the next one.